Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stein with tonight's Deep Dive. It is February 25th, 2019. I want to look at the S&P 500, the SPY here, just because I'm noticing a couple things just on a kind of review and just kind of give you a quick little overview of some of the things that are taking place. First of all of the trends are pointed up, short, intermediate, and long term. The technicals look good. The seasonal tendencies look good. There's nothing on the horizon as being overbought or oversold, but there's something beneath the surface that I really want you to see just to prepare you for what could be looming out there. So there's nothing that says that it is happening, but I just want to at least point this out to you. First thing is that we have some resistance that the market is butting up against right now. So here is today's bar. These are daily bars for the S&P 500. Specifically the E-mini. So we've got two levels of resistance. We've got 2810, which is this level right through here, and we have 2821 right through here. So I do see some resistance to the market. Obviously, we've had a nice little trend to the upside. The sell-off and the sharp reversal is actually, it reversed faster than I thought that it would, and that trend has been continuing. And we're now up against this, what I'm going to term as a thick resistance level. We've got two that are basically, when you look at the screen, almost on top of one another, and because of that, I just want you to look for resistance again between 2810 and 2821. That's what these two levels represent. Now the thing that I really want to point out is this: divergences, specifically bearish divergences, specifically elongated bearish divergences. And what do I mean by this is that here's our elastic level, and you can look at a lot of momentum type indicators. You'll probably see the same thing. You see this peak right here, peak here, we had a high there. Then later on, we had a higher high in the market, but lower peaks here in the indicator itself. Higher high, and we actually had a lower peak again. And now we're seeing the fact that we're up against resistance, and the indicator itself is still trending, if you will, just over the last 4 or 5 trading days to the downside. Now this can be reversed very quickly. We could break above that, and we'd come back up to these higher levels here. But for all intents and purposes, we're probably due, after having this nice little surge, almost a 45-degree angle pop to the market once it started getting moving in the right direction, that there's a potential for the market to sort of take a bit of a breather. On the positives, we're seeing an uptick in the 50-day moving average. We're seeing an uptick finally in the 200. So I don't know if this is going to be short-lived, or if I don't even know if it's going to actually find any major resistance. We could blow right through it. But because of the divergences that we're seeing and the relatively strong thick, meaning two different resistance levels, that there's an opportunity here for the market to maybe take a bit of a breather. I'm not calling for a complete reversal. I'm not talking for a bear market. All I'm talking about is that the market is probably a little winded here, and it's probably due for a bit of a consolidation. And this might be early talk here, but nonetheless something that you'd probably want to look at. Now the systems are still long the market, and they could reverse course, but for those of you that are watching the systems and wanting to potentially take some pay closer attention to the market, now would be a good time. Continued bearish divergences and obviously this strong resistance to the market, not a bad time to pay closer attention to the S&P and even for that matter the Dow Jones. So with that, we'll just simply look at another market here soon. I'm going to be presenting some new material here very soon. So the workshops and the webinars that I used to do, those are going to start to pop up again here very, very soon as well. And we'll kind of go from there. So thanks for watching. Bye-bye.